David, let's handle the shutdown element first. We've been discussing whether or not it really matters to stocks, given that the S&P rallied through the last shutdown. What do you think? David?
I don't think he can hear.
Oh. I don't think he can hear me. Jim, I'll pose that question to you.
Well, I think that the political pressure here is becoming so great, Carl, that they're going to have to resolve this one way or the other pretty soon. And I think it is going to be a non-event from the stock market perspective, at least. And hopefully it doesn't fall into another shutdown period. But I think the odds strongly favor that some kind of resolution will be done, and we'll move beyond this sort of fear of another government shutdown here pretty soon.
You've done some work on the trade war with China and the implications for stocks. Talk about what you found.
Well, you know, it's interesting. We're all hoping that President Trump can win the trade war against China and others. And there's sort of the unwritten assumption that if we do, that'll be good for us, it'll be good for stock market and the like. But if you look back historically to 1970, and you look at the relative performance of U.S. versus foreign stocks, and there's a really close relationship of that with what our trade deficit does. And it's almost the opposite of what you expect. That is to say, U.S. stocks have outperformed foreign stocks when our trade deficit worsens historically most of the time. But if our trade deficit improves, usually international stocks outperform the U.S. And so kind of careful what you hope for. If the Trump wins the trade war and improves our trade deficit, there's pretty strong historical evidence to suggest that you should be tilted away from U.S. stocks towards international stocks.
Is that offset, though, by, I mean, the trade deficit is one element of a deal, perhaps, but what about all the paths to make it easier to do business in China? Wouldn't that be an offset?
I think so, to some extent. Longer term, there's a lot of good things about renegotiating the trade, Carl. I agree with that. But to the extent that it affects the trade deficit, I think that it would improves it. I think it would cause international stocks to do better than U.S. stocks. Doesn't necessarily mean U.S. stocks go down, but it might mean that, you know, recently emerging markets have been starting to outperform the U.S. market again, as well as international stocks in general. That could be signifying that international stocks are coming into their own as a market leader, in part because we're getting close to the point to where U.S. trade is going to start to improve.
David Zervos, I think you can hear us now. I wanted to ask you about small business sentiment, which actually slumped to lowest level since Donald Trump became president. What does that indicate?
Well, Sarah, I think we're still feeling a bit of the hangover from what happened in Q4 with all the miscommunications from the Fed. So a lot of that sentiment is probably reflecting some of the negatives that we had October, November, December, and into the early parts of January. I wouldn't read too much into it, although I would say that, you know, we have, as we've discussed on the show, a lot of monetary tightening in the pipeline that the Fed's put in, whether it's QT that's continuing or the 250 basis points of rate hikes. All that's still coming into the system, and I think that that monetary tightening is still weighing a little bit on sentiment out there, and will continue to weigh a little bit on sentiment out there.
I guess what I'm trying to figure out, David, is the sentiment numbers turning over and some of the weakness in the surveys, and then more and more calls for an earnings recession, you know, where you see profit contraction 2 straight quarters, and whether that's all just sort of built up from the December performance that we saw and that the numbers are catching up, or we have more downside ahead, that things are slowing and getting worse.
You know, I think there is some truth to the it's slowing a bit story. I don't buy the kind of the major slowdown story, but I do think that we have some demand side headwinds coming from the monetary tightening that are going to be significant this year and probably make it a little harder to compete with 2017 and 2018, particularly with the impetus of deregulation and corporate tax reform, which were very positive. So the comps are really difficult. Doesn't mean we're going into recession. May mean we get a little bit of, you know, slowness in earnings, but for a while. But I don't think it's a sign that this economy is rolling over. I think the U.S. economy is still in a pretty good place, as long as the Fed keeps the pivot alive and keeps the idea alive that if things do turn somewhat nasty, they're there to pivot completely the other way.
That's a good point to throw to you too, Jim. I'm looking at Q1 consensus. I think is now down 0.8 in terms of earnings. 6 of 11 sectors in negative terrain. I mean, are these calls for earnings recession that out of the ballpark?
I don't think so, Carl. I think earnings this year could very well be flat or even down slightly. There's a lot of pressure, to David's point. You know, we doubled yields across the yield curve over an 18-month period of time. We flattened the curve considerably. Money supply fell in half from almost 8 to 4%. Gas prices, energy prices in general, commodity prices went up to 3-year highs. There's a lot of pressure on the economy as well as just profit margins with labor and capital costs rising. So I think that's a lagged impact. It probably comes home to roost this year. I think the good news also, to David's point, is we're already reversing this. The cavalry has come to the rescue here. Money supply was under 4% in late last year. It's now up over 5% or around 5% year on year. The yield structures dropped, you know, anywhere from 40 to 60 basis points from their highs. Overall, gas prices are off 25% at the pump. The fiscal deficit as a percent of GDP is 1% greater today than it was a year ago at this time. There's a lot of now cavalry stimulus coming to the rescue. And I also think the dollar will come down soon, which could help take some of the pressure off. So I do think we have disappointing earnings yet to face, but I think there's a window out there in the future where they get better again as well.